Hello, I'm Emilie Bellet, founder of Vestpod and author of You're Not Broke, You're Pre-Rich. And you're listening to The Wallet. Every week we bring you the best tips, guidance, and a good dose of inspiration and motivation to help you manage your money better. Welcome to today's episode. We are talking about self-assessment, a money admin moment many people find stressful, and how to approach it with more clarity and less panic. Whether you are self-employed, juggling a side hustle, earning rental income, or dealing with a more complex setup, this episode is about what actually matters, what commonly catches people out, and how to stay in control as the January deadline approaches. I'm joined by Maike Currie, VP of Personal Finance at PensionBee, who will walk us through the rules, the key deadlines, the biggest misconception, and what is coming next with Making Tax Digital from 2026. Just a reminder that we are not certified financial advisors. The information made available on this podcast are provided for information and educational purposes only and does not constitute financial advice. Also, with investing, your capital is at risk. Hi, Maike. I'm so happy to have you on the wallet today, and we're going to talk about a tricky topic in January, and it's the self-assessment. So, if we go straight in, can you tell me who actually needs to fill a self-assessment tax return?
Sure. So self-assessment is something that comes around every January, especially if you're doing it digitally. And it really means you need to declare any income you've had if you are self-employed. So if you're working for yourself and you earn more than £1,000, and what we're talking about there is income, not profit. If you are a landlord, for example, or maybe you've sold some shares or you've sold a second property and you've had some capital gains released because of that, you need to fill out a self-assessment.
Yeah, so it's actually quite broad, and I think most people don't really know. I'm not too sure if they actually need to fill a self-assessment tax return. If you fill the self-assessment tax return once, does that mean you need to do it every year?
No, so that's something people often get confused about. So just because you filed it once doesn't mean that you need to do it again. But if HMRC does send you an alert that says you need to fill out the assessment, you need to let them know that you're not going to do it that year. Otherwise, just ignoring it can be really risky, and there will be penalties.
So can we look at who needs to file a self-assessment?
Sure. So very interesting, Lee, if you think about it, at the start of 2025, so last year, 5.4 million people who had to fill out self-assessment hadn't done it yet. So
Wow.
It's quite a substantial part of the population. We are talking about high earners here. So if anyone who earns over the £100,000 limit, anyone who earns in a partnership, a couple, if one partner earns more than £60,000 and has benefited from child benefit or made use of that, perhaps you are a landlord or you are self-employed, even if you are renting out a room or you've got a side hustle. So it really is quite a wide group of people. And there are a lot of people who think that they might not be responsible for self-assessment. So it's worth doing your homework and finding out.
Yeah, definitely. And in terms of actually filing, we're recording this episode in 2025, but it's going to be published at the beginning of 2026. What are the deadlines? Can you give me the key dates?
There are a number of deadlines. In October, we have the deadline for paper filing. In January, 31st of January is the deadline for digital filing. You usually need to pay any tax due by the end of January, or if there's a second payment, you will need to make that by July. So there are a number of deadlines to bear in mind. The irony is that most people end up leaving it to the last minute, my present self included. So I am sitting here, we are in December, and I still need to fill out my self-assessment. What I typically do is I call it crimbo. So that period between Christmas and New Year, when we're all in a bit of a limbo, we've probably had the big Christmas meal, we've got some time to kill. It is the dark days of January, if you like. And that really is a good time to just sit down and to fill out the forms and to get it done. Obviously, that's not ideal. The ideal thing is you can start by the start of April when the new tax year kicks in, and then it doesn't feel like such an onerous task because a lot happens in a year. You might forget about some earnings you've had. You might forget about some contributions you made into your pension. So it really is about getting on top of the admin. If you're not on top of the admin, like I am not on top of the admin at the moment, then it is really important not to miss that deadline, the 31st of January.
Yeah. And can you tell me how you're going to plan on doing this? Is it like a one-off session? What are you going to look at? What, logins do you need to?
Yeah, so really important is you need to have registered and you need to have that unique, what do they call it?
UTR.
UTR, that's it. So
unique taxpayer reference.
That's it. So when you've got that, make sure you store it. It's quite good. Like once you've logged in and you give the instruction, it will store all your details for I think about 7 days. Important thing is to have registered for that. It's a really long number, so make note of that. And then, before you go and sit down, make sure you've got all the details you need. Like, what were your earnings? Did you make any pension contributions? Did you have any gains from a property you might have had? Did you do any renovations to property? A lot of people choose to outsource it to an accountant, but it is doable to do it yourself if you're on top of the admin and you just keep note of everything you do. What I tend to do is I've got an Excel spreadsheet on my laptop, and when I am making any contributions to a pension, I take note of that because honestly, so much happens in a year, you could easily forget about it.
Yeah, definitely. And if you're self-employed, I think it's even more relevant.
Absolutely.
And if you have, I have my own limited company, and as a director, I find it quite helpful to work with the same accountant who can also help you on your personal taxes. So yeah,
that's a good point.
A little bit easier.
Yes, absolutely.
I think you've covered that, but why do you think people wait until the last minute? Is it the stress? Is it not knowing? Is it not wanting to pay tax?
Well, I think there's something in human nature. We do tend to leave things to the last minute, especially tasks that feel really onerous, like tax. I think there's also emotional barriers to it. It feels really intimidating. There's a fear of getting it wrong. But when you actually sit down, I'm always surprised every year when I can motivate myself to sit down and I do it. It's not that hard, and there is a kind of pattern towards it and a cadence, and you kind of get used to what the questions are and what each section means. You need to educate yourself. I would say if I had a New Year's resolution for 2026, it would be not to leave it till the last minute because I think there's always a risk. The other thing is if you do it earlier, you have a better idea of what your tax bill is. Now, if you're in January, you've just come through December, Christmas is an expensive time. We've been having big meals. We've been treating the family. And then you get hit with an unexpected tax bill. It's a nasty surprise that you can avoid by doing it earlier in the year. And then you get an idea of what tax is due.
Yeah, and I think, starting from April is probably it. See it as a, spring cleaning your finances and start doing your...
Absolutely. It makes a lot more sense and you get on top of things. And also then you can do something which is really valuable, which is making contributions to your personal pension.
Yeah.
Because if you do that, if you are working for yourself or if you are a higher rate taxpayer, by making contributions into a personal pension, you're actually bringing that tax bill down thanks to tax relief. So I think that is a really good tool that is underappreciated and is in effect free money from the government. Who doesn't like free money, right?
And if so, let's talk a little bit about pensions contributions because also that's what you do at PensionBee, talking about pensions in a very easy way. What if I actually didn't put money into my pension and I'm like, oh, actually, can I put a little bit more money into my pension to reduce my tax bill? When is the good time to do it, and can I still do it in January?
Yes, you could do it for the current tax year. So really it is about doing it earlier. I think pension contributions is so powerful. So remember, if you're a basic rate taxpayer and you put the money into a pension, you immediately get the basic rate tax relief. But if you want to get that extra tax relief, you have to do it through self-assessment, and that can bring your overall tax bill down. Obviously, you can't contribute more into a pension in terms of what you've earned in that year. And even if you're not working, or maybe someone you know is not working, a partner or a child, you can contribute in a pension on their behalf up to £2,880, and then the government tops that up with £720. Doesn't sound like a lot, but over time, with the power of compound interest, that can really accumulate. And it's really important for women, for the self-employed, if you're taking that career break, to have the conversation that someone is contributing for you.
Yeah, and definitely that's something we discussed in the Vestpod community. It's quite difficult to have the conversation with your partner, but if you decide to stay home, if someone can cover this 1 year, 2 years, whatever of contribution, that's actually really important.
It's so, so important. And we know there's been a lot in the news about salary sacrifice,
Yes.
which is changing, which is where you get relief at source if you're in formal employment. That is something, again, that will impact women if they go on maternity leave or the like. So it is so, so important. And there's no reason to feel guilty about it or feel
No.
bad about it. You're taking a step away to raise a family, to look after children, but your pension is taking a knock in that time. And it's very important to think about what's going into it.
And when we look at the the gender pension gap, it actually starts very early. It's from these early years where you don't
Yes.
contribute, and it's the amount, as you said, that has been compounding for like.
Absolutely. I mean, it's staggering. I always think when women are in their 50s, so when you should really be thinking about retirement, when you are in that critical zone, financial advisors refer to it as the critical zone. You look at your pension, and on average, you've got £100,000 less in your pension
Yes.
pot than your male counterpart. And why? The gender pay gap does play a role, but a much smaller role than what career breaks plays. That's the biggest impact. And those career breaks increasingly happen in our mid to late 30s, the childbearing years, and it's very hard to catch up. So, realize that the podcast is about self-assessment, but one of the key tools to self-assessment is those pension contributions and putting that in and making sure you get the tax relief. Especially we speak a lot about side hustles, right? So increasingly people are selling things on Etsy, selling things on Vinted, maybe doing some work on Fiverr. And often they think that those earnings, they don't need to declare it.
Yes.
Remember though, if the income is more than £1,000, I'm talking about the income, not the profit, you do need to fill out a self-assessment. It is so, so important.
Yeah, and I've actually done a conference with small sellers who small on Depop, and that was the clear message, because he was really looking at how do you record also these revenues and work with your platforms.
Yes.
You talked about now, okay, we've looked at our pensions, we decided, okay, we can contribute a little bit more. That's going to impact how much taxes we pay. That should lower our tax bill. Now, what about the payment itself? And what if we don't have enough money to pay this tax bill at the end of January?
So the best thing to do is to let HMRC know about it, and they can work out a payment plan for you. The worst thing you can do is to go silent.
Yeah.
Because then the penalties will stack up. And my experience from myself and from friends, if something has happened, maybe you can't pay it, maybe you've had a really traumatic time or a loss in the family, let HMRC know and they can work out a payment plan for you. But the worst thing you can do is to stick your head in the sand and hope that it's going to go away.
Yeah. And HMRC are actually very helpful. I've called them a few times and they're really helpful on the phone or
They are, and they are very much focused on making this more digital to make the whole process easier so that it's not a shock once a year.
Can you give me the exact date so people can just open their calendar and start putting these dates in for next year?
Absolutely. So key dates are the 5th of October, when you can register for self-assessment. The 31st of October is the deadline for paper submissions, which increasingly is being phased out. And then the key date is the 31st of January, which is the online return deadline and payment. And then the 31st of July for second payment on account, if that is applicable to you.
Amazing. If you're getting ready for self-assessment and thinking, I should really get on top of my pension, PensionBee can help. They are a leading online pension provider, supporting people across the UK to feel more confident about their retirement plans. If you're self-employed, their flexible pension can help you take control of your pension. With the PensionBee app and website, you can bring your pensions together, check your contributions, and top up in a way that works for you, which may help you make the most of your allowances before the tax year ends. Download the PensionBee app or visit pensionbee.com/UK to get started. And remember, when investing, your capital is at risk. That's probably anecdotal, but every year on the 31st of January, the websites tends to slow down.
Yes, and that can cause a lot of anxiety.
Yes.
So the crimbo period, between Christmas and New Year, you've got time off, right? the days are long and dark, use that time to do it. Do not wait until the 31st because you will have a bit of a buffer potentially, and that can cause so much anxiety. Of course, you can always phone HMRC, but the phone lines are going to be busy. So the worst thing you can do is to leave it until literally number 99.
Yeah. And also often you need some statements from the bank to see how much interest you got, or even from, the platforms if you've had a side hustle. So you need a bit of time to actually
Yes.
collect all this information.
You definitely need time to get your admin in order. Now, you could do that by kind of documenting it in a spreadsheet, making notes of key interest payments or any capital gains, or even just contributions to charity, which is something you
Yes.
should also declare in your self-assessment. I always find when I'm contributing to charity to make sure I get that email sent to my inbox and then putting it in a folder, and then I can look, when you've sponsored someone, all of those donations count if you've registered for gift aid. Make sure you keep on top of the paperwork. If you've rented out a property and you've done renovations, that can impact when you do your self-assessment. And in the course of 365 days, right, you're going to forget about all of that.
Yeah, definitely.
So you have to keep notes of it. You have to keep your paperwork in order.
And keeping it in an Excel file, anything, notes on your phone, a notebook, anywhere. That's actually super helpful. HMRC actually sends you emails to remind you that you need to do your self-assessment, but you tend to ignore this because you're really busy. But I was quite surprised on their latest email. They say that you can ask a friend, family member, or agent to help. How can you trust someone with your tax return, and who can you trust?
Yes, that's right. So HMRC does allow you to have designated people to help you with that, like an accountant, and you often declare that when you're filling it out. I would say make sure you use someone who's qualified, who knows what they're doing. Never share your passwords. If you want to talk to an accountant, you've got to be really sure that you are sharing the information with someone that you can trust and that's someone who has the experience. In terms of when you pay and how much you pay, it's important to know that any tax owed is due by the 31st of January. But let's say you've got to pay more than £1,000, you can do payments on account, and you can do that between January and July.
Okay, amazing. And how does it work? So you contact HMRC, you decide you want to pay on account, and basically they will split the bill for you.
Yes, and you can make advance payments over the year from January to July. So it's not such a big hit to your spending, really.
Yeah, that's amazing. So either you put the money in a savings account that's denominated for, paying your self-assessment, taxes, or actually you pay an account.
Yeah, that's a good point. I mean, I always start the year with good intentions, and you've got some money put in an account, and that's going to go towards your self-assessment.
But then...
and then you kind of tap that account, and before you know it, you've spent it on something else. So I do think, there's no point in jeopardizing we know the cost of living is high, so there's no point in saying, oh, I have to pay this big lump sum, when you can make use of advance payments and you split the payments over the next 6 months.
Yeah, especially if you're a freelancer, business owner, you get paid for a contract, maybe, start paying in advance. So at least, that's done.
Yes, because we know your earnings can be quite lumpy if you are working for yourself, if you are a freelancer. So whatever you can do to smooth out payments, or you can do contributions to your pension, smoothing that out so there's never a big shock to your finances makes sense.
And you avoid a big stress over December and January.
Absolutely.
What scams should people be watching out for at the moment?
Really good question, because scams are rife at the moment. I've actually had a few texts and emails which were scams, and we need to be really alert. Often the technique that fraudsters will use is they'll play on fear. So they'll threaten a fine. And the first thing people will do, like, oh, I don't want to get fined by Her Majesty's Revenue and Customs. I'm going to pay this. But think about it. Think twice about it. HMRC will never ask for personal bank details. They'll never ask for personal details. And the Financial Conduct Authority, the FCA, which is in essence the watchdog for all financial services firms, is really clamping down on fraudsters and scams, which is something that's been on the rise in recent years, and play on our kind of fear of doing things wrong. So go to their website, check, is this legit? Think before you have to, because again, anywhere where you are being kind of urged into doing something really quick, you've got to ask the question. And sometimes people get alerts from years back, and they think, oh, maybe I should just do this because they think they've got it wrong. Wait, do your research, and check with HMRC and with a regulator.
No, thank you. That's super helpful. And what happens if you've actually been scammed?
Well, that's a difficult one because you're going to have to speak to your bank. And sometimes your bank can help you. You can recover the money. But again, if you suspect you've been scammed, you've got to act quickly. You've got to alert your bank. You're probably going to go through a lot of rigmarole where you're going to have to reset your accounts. And hopefully the insurance through your bank, often you get this with a credit card, will reimburse you. But again, if you suspect you've been scammed, don't be embarrassed, because I know people who've been embarrassed and just write off the money. Go speak to your bank and also inform HMRC so that they can clamp down on this. I think something that's really useful is looking on company websites, financial services companies, HMRC, where they will inform you of scams that are going around. So inform yourself. And an exercise I often do is when I see something and it looks a little bit suspect or I don't feel comfortable with it, is just doing a search and seeing if someone else has experienced this. And very quickly online, you'll get to a chat group or something similar where people say, watch out, this is a scam. So do your research before you do something.
Yeah. And the same applies for phone numbers. I feel we get a lot of, fake numbers actually calling at the moment.
It's frightening. It's just on the rise. And they very often play into our fear by threatening fines or saying you haven't paid something or saying that you could be imprisoned. And obviously, that scares people into doing something quite quickly. Make sure you know what is being threatened and is it legit or not.
I'd love to look at a few different categories or specific situations. So maybe if we start just with the high earners, if you can tell me what are the main tax traps you see?
Well, there's a lot because we know with personal tax thresholds being frozen, more and more people are being pulled into higher rate tax thresholds. The key one really is the £100,000 tax trap. And this means that if you earn just £1 over £100,000, you are likely to pay 60% tax, even more than that if we take in national insurance contributions. Now, this is where self-assessment becomes a really useful tool, because if you just make a small contribution into your pension to keep your income below that 100,000 threshold, tax trap they call it, then you can still have your personal allowance and you pay so much less tax. But equally, child benefit. If you are married and the couple earns over £60,000 and you make use of child benefit, once again, you could lose that benefit and you can be hit with a big tax bill. So it is important to think about contributing into your pension, because in both cases, if you contribute in your pension, you can keep yourself below the £100,000 threshold, but you can also keep hold of child benefit and the child help towards childcare.
Yes. So I've heard you discuss the budget a lot over the past few weeks. Can you tell me, is there anything in there that could impact people doing their self-assessment tax return?
Absolutely. I think the biggest news in the budget was the tax that wasn't an official tax, and that is the freezing of personal tax allowances. It means that 12.4 billion people are being pulled into higher tax bands. And what that in essence means is that self-assessment will no longer be a niche topic for the few who work for themselves, for the self-employed, or for the super wealthy. That threshold has increased 78% since 2020 in terms of how many people are paying higher rate tax. Now, as it stands, 1 in 5 people pay higher rate tax. In time, it will be 1 in 4. So increasingly, people are earning more, or they're paying more tax, not because they're necessarily better off, but because the thresholds have been frozen. It's known as stealth tax. It's a way of getting more tax from people without raising tax rates. And really, self-assessment, the admin that goes around that, and being really careful of those cliff edges, breaches, be it the 100,000 earnings limit where you lose your personal allowance, or being caught by child benefit. All of those we need to be very aware of, because you don't want to lose those personal tax thresholds. Now, the most important thing you can do is to make contributions into your pension and to make sure that you're comfortable with self-assessment, because it's going to become a reality for more and more people.
Yeah.
And it shouldn't be that intimidating. It is intimidating. It's emotionally loaded. But, if you get your head around it, I've been doing it for a number of years, having worked, I was in formal employment, but I worked as a freelancer. I did a load of articles freelance, and I had to declare that income. So I've been doing it for a couple of years. I can remember when I started out doing it, I felt very intimidating, and I felt like I was doing it wrong. But now I do it myself because I've done it a few times. I can do it. And there's a place absolutely for using an accountant.
Yes.
But if your affairs aren't that complex, you still need to fill it out. You can do it yourself. So the more you build your knowledge, the more you become comfortable with it, the better. Because not only do you save on the bills for an accountant, but you also save on paying too much tax.
Definitely. And I think that's almost part of your, financial well-being and financial wellness. So when we talk a little bit, at Vestpod in the boot camps, we talk about budgeting, writing your financial goals, knowing, how much money you should save for your future and in your pension. Actually, once you're on top of these finances, it's a lot easier to then work on your self-assessment tax return, because you will have an idea of, how much tax you will have to pay and stuff like that.
Yes, I think if I sum it up, a self-assessment, the task of doing self-assessment in itself is not that onerous. You could probably do it in 20 minutes if you know what
Yes.
you're doing.
Yeah.
It's actually quite an easy task. The hard bit is the administration that goes along with it. Are you on top of your admin? Are you keeping notes? Are you making pension contributions? And when you do these things, pension contributions, renovations to a property, selling something on Vinted or Etsy or side hustles, are you keeping track of it? And again, you don't need to over-engineer it. It could be an old school notebook that you write everything in. Just don't lose the notebook, or make some notes on an Excel spreadsheet and make sure you save it somewhere on the cloud where you won't lose it. But if you've done it that way, the whole
It's a lot
task
easier.
becomes so much easier.
We've talked a little bit about side hustles, all these platforms like, Etsy and stuff like that, where you generate money, a little bit about property income, money from savings. But what about benefits in kinds, maybe dividends, foreign incomes? What does count and doesn't in your self-assessment?
I think the easy way to say it is that almost all income, dividends, capital gains, if
Yes.
you've sold some shares, maybe you got some shares from a company and those weren't held within a tax-efficient wrapper, they were held in a general investment account. Dividends, foreign income, all income that does not form part of pay as you earn, which is basically formal employment, needs to be declared. So again, you've got to keep track on that. Any foreign income, again, needs to be declared. So it is, in short, an admin job.
Yes.
And we often forget about things that we've done or income that we've got. It's better to be safe. Increasingly, the government is clamping down on tax evasion or any kind of loopholes that people try to tap in. So my view is always be transparent, put it in. And if you've made a mistake, right? Let's say you've done something wrong, or you've filled out the wrong section, just let HMRC know. Putting your head in the sand and hoping that it'll go away or no one will notice is a bit of a risky strategy.
What about people whose income suddenly drops? How do they avoid overpaying tax?
Well, that's something that happens quite often, and you might get hit with a tax bill because HMRC isn't aware that your situation has changed. Similarly, if I always think about people who take their pension and they take that lump sum from the pension, they get put on an emergency tax code and they immediately get hit by higher tax. So the biggest thing there is to let HMRC know and to make sure you fill out that self-assessment, because you could get back tax. I mean, that's the other beautiful thing about self-assessment.
Yes.
If you've done your homework, if you've done your admin, if you've made those pension contributions, it doesn't need to be a nasty surprise. It could be quite a nice surprise where you get money back from the government. So I would say let HMRC know and be aware that there are things like emergency tax codes. And it is worth, I'm not an accountant, I'll say that now as a disclaimer, but it is worth checking if you're in formal employment on your pay slip, what tax code or have you been put on? Like what is detailed there? Because each one means something different.
Regarding pensions contributions, now we really understand that it's important to top up your pension for your financial future. It will also help you on your tax bill. Can you give me a few tips on how people can actually top up into their pensions, whether they're a full-time employee, they're self-employed, or maybe they run their own limited company and they're a director of their limited companies?
Yes. So the key thing to do is to really have a personal pension set up. So there are various ways you can do it. A company like PensionBee offers personal pensions. There are other providers available too. It's often called a self-invested personal pension. And you can either contribute a lump sum. Maybe you've come into some money and you know you're not going to need that money and you pop it into your pension. You just make the payment into the pension. You will get the basic rate tax relief immediately, or it'll show up in a few weeks' time. But make a note of that. Some platforms that offer self-invested personal pensions are really good. So at the end of a tax year, you can see they'll give you a summary of how much you made, how many contributions you made. Or a safer way, as I said, if you want to smooth things out, is to set up a regular investment program, which is just basically saying every month I want to put £200 into this pension. So it's quite straightforward. I always say think of your pensions in terms of 3 pensions, right? If you are in formal employment, you will have a workplace pension. Often the money that goes into that workplace pension will go straight off your salary, known as salary sacrifice, and your employer will also make a contribution. If you are working for yourself, you don't have that luxury, and you should really set up a self-invested personal pension, or a personal pension for short. And then all of us will be making contributions towards our state pension eventually. And what that boils down to is really how much national insurance you've paid. Have you been
Yes.
making national insurance contributions? If you've not been, it's really important in terms of child benefit, because that racks up your national insurance contributions. So those are the 3 pension pots, if you like. Contributions is as simple as if you wanted to make an overpayment in your mortgage, you would make the payment from your account.
So does it mean we've had this question a lot, does it mean you have to be a little bit more strategic around getting a pay rise and, how much money you will actually get in your pocket after paying taxes? So I guess pension contribution is a good way.
Absolutely. I mean, the truth is that a lot of people are reducing their working hours. Increasingly, people are choosing to work 4 days, because when they do the sums, it's almost worth earning a bit less, paying a bit less tax, not losing those allowances, than it is getting the really shiny big salary, but then you lose the allowances and you pay more tax. But a really good way where you can kind of have your cake and eat it is to make pension contributions, because that's the way to keep your earnings below those cliff edge thresholds. I actually heard someone say the other day that the UK tax rates in the UK looks like a Manhattan skyline. And it's a really good description if you think of kind of skyscrapers and the big cliff edges, where if you pass a certain mark, that can mean you're losing an allowance. So it's important to be conscious of those and to be really active in your planning.
Yeah, that's really important. So yeah, keep track. I think AMJ and Marcia are quite good at updating you. Follow the newsletters that they send. Yeah, keep track of your income. There's going to be some developments regarding self-assessment in the UK, and I wanted to ask you, what is the Making Tax Digital for Income tax self-assessment?
So we spoke a lot about self-assessment being this event, something that adds to the dark days of January. But actually, this development is really exciting, because it means for self-employed and for landlords, anyone earning over £50,000, the frequency and the format of self-assessment will be changing. So no longer will it be a once-off event, but every quarter, HMRC will send you updates digitally, which basically means you need to update in terms of your earnings, and it won't become that one-off event. You can even use spreadsheets if it links to the software. So in essence, it's going to make that whole administration of doing self-assessment so much easier. And I think it's a really welcome development.
Yeah, and I think we'll follow it and we'll keep you updated, but I think it's going to be super helpful. I have 3 quick fire questions for you. One thing people can do now to avoid a January scramble.
Right now, I would say get on top of your paperwork, have a look back at what you've earned, look back at any pension contributions you've done, get on top of your admin. I know it's difficult because we're all wrapping presents and we're all planning meals, but honestly, that's the best thing you can do.
One pension myth you wish everyone understood.
There are many pension myths, but I think the biggest pension myth is people thinking that their property is their pension. We're talking about self-assessment. There will be loads of landlords listening. Increasingly, the tax burden is becoming so much more onerous. And, when you're 85 years old, a property is going to struggle to pay the bills, the admin that goes with that. So I think it's really risky to believe that your property is your pension. I believe we all need to get involved with our pension, and it's never too late. As soon as you can start, you can benefit from free money.
One habit that makes next year's tax return 10 times easier.
Start on the 6th of April. Start earlier. I think the making tax digital development is really easy, and depending on how well the systems work, I think it will make everyone do better in terms of the self-employed and landlords, in terms of their administration. But I honestly think, it's human nature to put off things till the last minute. Do it earlier. And can you imagine that feeling of relief?
Oh, yes. Yeah. Thank you so much, Maike, for all these tips. It was amazing to talk about taxes, self-assessment, and pensions. And we can follow you with PensionBee.
Thank you so much for having me. I've really enjoyed it.
Thank you for listening to The Wallet. We hope today's conversation gave you clarity and reassurance as you prepare to file your self-assessment tax return. If you enjoyed this episode, subscribe to The Wallet on your favorite podcast platform. And for key takeaways and highlights from each episode, follow us on Instagram at Vestpod, where we share practical insights to help you feel more confident with your money.